Well, good evening and welcome to a first for all of us. What we're going to call this, it is the Berkeley Assets Social, if you like, and it might be Berkeley Assets Sweaty Social for us today. As you know, Berkeley Assets like to do things a little bit differently, so we've divined on coming together at various locations around this beautiful city of Dubai, maybe once a month or so, just to bring you up to date with how things are going at the company, how things are going internationally, and give you a bit of a feel of what to expect. So what we're going to do today, think of it, if you like, as a monthly statement. Remember when you used to get those through the post, from your bank account, wherever it was? You get your monthly statement, a little update from the bank. Well, we'd like to do it a little bit more socially with the team. We've got the creme de la creme from Berkeley Assets alongside me, Tom Urquhart. And for the next few moments, we're going to be crunching a few numbers, busting a bit of jargon, and bringing you bang up to date with some of the news that you want to be hearing. As always, we need your interaction. Get involved on the social with any questions, comments or otherwise, and let's see how long we can last before we all become really sweaty messes. I want to start first and foremost by introducing the special panel. An absolute pleasure to have Gary, Riz and Omar alongside me. Fellas, thanks for taking one for the team. I think that's what we call it, Omar?
100%. I'm not sure who came up with this suggestion to sit out here in this heat, but I think you wanted to get us uncomfortable.
I think we're going to call it the Berkeley Assets last man standing, when face first, isn't it?
I came prepared. I came dressed.
Yeah, you're stressed for the occasion, indeed. Listen, really appreciate your time, and thank you so much indeed, fellas, for being with us. I just want to start with a bit of jargon busting, if I can. I think a lot of people, and I appreciate there are a lot of institutional clients, there's a lot of personal clients who'll be tuning into this, and we're trying to get a balance, if you like, of what they want to be hearing. But one thing that I hear quite a lot in what I do day to day is that a lot of people get scared off, they get put off by the jargon in the finance industry, specifically in private equity, or PE as you like to call it. So first one's first, who wants to take this one? Give it to me in layman's language. What is PE? What is private equity?
Yeah, I'll take it. So if you go by the definition simply says that private equity is capital that is not listed on an exchange. Doesn't really tell you an awful lot, but that's the definition of it. So if we think that in the realm of money that's being invested, it goes onto an exchange, that's public money. Everything that goes onto or gets into a company or into a project that isn't on an exchange, FTSE 100, Dow Jones, S&P 500, all those that we're familiar with, that's the sphere of private equity in a nutshell.
That's perfect, that's what we're looking for. The other one we've got through, and I'll put this one out to the masses a little earlier on, is the difference between partners. What's the difference between a limited partner and a general partner? Who wants to take that one?
Limited partners and general partners generally refers to funds in private equity. So most of the time, private clients aren't actually faced with having to see what a limited partner or a GP, as we call it, are. Essentially, when it comes to a fund structure, the general partner is the one that is controlling the money and is the one placing that capital into said investment. So for us, we have a real estate background, tangible assets in the UK. The limited partner will be the various institutional partners that have put their capital into the pot of that fund, and the general partner then goes and puts it into the investment.
How does PE or private equity differ, or does it differ here in the UAE, here in the region, than it might do for viewers over in London or elsewhere in the world?
I think private equity, like with all industries, depending on where you are and which jurisdiction you are, it will vary. You'll have a slightly different culture, and that's largely down to the society or the market and how educated they are in private equity in this case, or whatever industry we're talking about. And also it boils down to the regulatory bodies, how they're positioned in regards to private equity. It comes down to how many institutions there are in a jurisdiction. So there's multiple factors that can influence the nature of private equity in any given region. So when you're a global firm and you're positioned across different continents, you're obviously dealing with a lot of different cultures, and you have to be very adaptable. And I think that's one very kind of prevalent thing in the private equity industry, is that firms tend to be very flexible and adaptable to changing conditions, which is why when the economics change, PE firms tend to fare better.
I'm glad you talked about those conditions. We're talking of conditions as we all try to mop our brows a little. But talking of conditions, I mean, we're obviously going to get into the elephant in the room in a moment. I just want to get one more from you with regards to, there's always been this feeling that PE, private equity, is one for sophisticated investors, people who know what they're doing, institutional investors, if you like, rather than mainstream investors or your average Joe off the street, etc. Has that changed in any way? Is it changing at the moment?
So I mean, it's changing. Like any investment sphere, it changes. So if you go back 30 years ago, having a financial advisor was classed as, oh, you must be wealthy, you must be doing well. Dealing with a stockbroker, you must be doing well. So as we all become more educated in the whole investment sphere, slowly and slowly other elements within the investment world become more available. And private equity used to be, and it's predominantly an institutional investment business, and it's slowly become accessible to private clients. It was for the wealthy, and that board and that boundary is being reduced, and more people are becoming aware of the benefits of it. So the perception of it is still there, and it still very much is, to be honest, but it's becoming more attainable now. It's not just something which is for those behind closed doors. It's becoming more real to many people.
It's a really competitive market around the world, really. So what can, I'm using the phrase PE at the moment, so I can use the phrase BA as well. What can Berkeley Assets do to set them, or what do they do, more to the point, to set themselves apart from the competition and do things a little bit differently to give people more confidence, more peace of mind, other than us sitting out here in 49 degrees recording this?
Well, that's a good question. I think one of the things that we're quite proud of is we're on a mission to educate the public about what private equity is and how Berkeley Assets deal with private equity. So, looking at the UAE region, it's inundated with financial products, which you could say is our competition. But we really, as Gary said, appeal to the sort of higher net worth guys. That traditionally minimum entry was around 250,000 US. We've scaled that right down to 100,000. And for most people out here, that is quite accessible through whatever means that they have. And we offer something very different to the marketplace, which a lot of people aren't aware of, which is the way that we do business is by offering private clients a fixed return, which is unheard of in today's sort of market or sphere, however you want to say it. And we make things very transparent, something that's very easy for them to understand. And the clients that we sort of deal with, once they understand it, they really like it and they feel it's something that complements their portfolio exceedingly well.
I hope you get the idea of the transparency. There's not many companies that would agree to do it in these sort of conditions, but this is where we are. This is where they are calling home. This is who we're appealing to at the moment. And talking of this is where we are, I want to move on to the elephant in the room if I can. Look, I don't need to tell you guys, I don't need to tell anybody out there that COVID-19 has put a rather large spanner in the works recently for just about every individual, just about every industry. One thing I hear day on day in my work is how industries are being forced to pivot at the moment. Has private equity had to pivot, and if so, how so?
I wouldn't say that PE's had to pivot. I think, kind of crossing over a few of the questions you've just asked. Traditionally, institutions, and the reason why it's always stayed in that realm, which is quite mysterious to the masses, is because in order for the economy to turn, you need fluctuations in the marketplace. So you need a bit of volatility. Now, volatility can come in and does happen in very unnoticeable or small areas of growth, and also naturally it falls. But times like this, I think, pushing COVID aside, it's the whole idea of or another recession. And I think anybody in private equity or anyone in elite finance will have known, will have understood from the patterns in the market over the last few years, and the fact that we've been on a bull run for just over a decade, that a recession is going to come at some point soon. So whether that's caused by COVID, or whether that's caused through a banking crisis, or whatever that might be, the end result is the same, right? Where the economy ultimately declines or eventually crashes. So we haven't had to pivot, and I think that's why institutional clients trust private equity, because they know that we are experts in understanding the market conditions and responding to it in a fashionable manner.
Gary, it's been interesting, isn't it? And we're not here to look at stock markets or anything like that. We'll leave that to others and for another day. But it's interesting seeing that people spying the current situation as an opportunity, savvy financiers, if you like, out there. But for your average Joe, I mean, for those tuning in, maybe looking for the first time to do something with their money, is COVID-19, does it equal risk or opportunity?
Opportunity. And I don't want to sound like giving the obvious answer, because that's, you almost want to say risk just to give an alternative answer, but it is an opportunity. Whenever there's a downturn, whenever there's a market correction or a downturn, of course, if you can buy something that was at $10 and now at $5, of course, it's an opportunity. Just be aware of the reasons, what made that market turn in the first place, what's going to make that market, rise again. So I think the biggest risk is not about whether you take the opportunity when the market goes down. It's understanding what's making that market go back up again.
Yeah.
So is the risk that you're jumping in because there's a decreased value in what you're buying, or is the market risk that there's a bigger fall around the corner because what's made that market rise in the first place isn't necessarily private buyers, private investors coming in and pumping the market back up again. So understand there's opportunities in market fluctuations. Volatility is good for investors, but just be cautious always. It's the reasons why there's a downturn and the reasons why a market is shifting back up again.
Just a couple more before we dive inside to air conditioning. But there is one for you, because I'll be honest with us, we're amongst friends and things like that. You can tell us about how things have changed maybe since the beginning of the year, but have you as a company had to change strategy since COVID-19, from maybe looking at it from January the 1st as opposed to what's happened since then as well? Have you had to change your outlook and your strategy for the year?
Yeah, I think we've had to encompass what the changes in the market have brought to us, not only as an industry but as a company. So, during the sort of lockdown period, obviously not being able to go into the office, we were having to work from home. There was a strategy incorporated from the company in terms of how they look after their staff, in terms of how we dealt with our clients during this turmoil, in terms of the communication that went out to them. There was always a strategy in place, and to embrace it was the most sensible thing. To kind of not would be the most foolish thing to do during this climate. So absolutely, and we embraced it with both hands, and we've come out of it very strong. We've been able to complete a lot of projects as a result of how we've embraced it, and we're stronger and we're looking forward to the future better than ever.
And just to add on to that one, Omar, if I may, in terms of investment models, because there might be those that have got skin in the game already, those that are looking for opportunities. Does the strategy change with regards to investment models for the rest of 2020 in light of what we've all been through?
I think it very much depends on your remit as a firm. So a lot of PE firms have their own niche, and I think we come under that bracket where we specialise in tangible asset-backed businesses or real estate in the UK. So our model doesn't necessarily change. We are still going for the same type of assets. We still have a criteria that we have tried and tested over the years and that we will continue to abide by. What does present itself in a time like now is, like Gary said, is opportunity. But it's almost a good test for the firm, because there's so much more opportunity. There's distressed sellers out there because of the situation, and you have to be able to apply that criteria and select your projects very, very carefully, because you need to understand, again, like Gary said, the foundations of what that project is built upon, and what is going to drive that marketplace back up. Fortunately, UK real estate for centuries has been one of the safest asset classes almost in its own right out there, and that's why I think we are easier for both institutional and private clients to understand and to trust, because there's an element of comfortability there.
Yeah.
Whereas when you're dealing with funds, especially with private clients, they're not necessarily as comfortable because they don't understand the structures, which and they're not easy structures to understand.
So, and again, just to alleviate any concerns that people might have out there, in terms of looking at where we are, and you don't have to be Poirot to work out that we are in the Middle East at the moment. There's the height of the summer, absolutely stunning background down here at the moment. But there will be sort of rating agencies that look at this region as a whole and go, all things aren't great, the outlook, etc. What do potential money givers, investors out there read into that at the moment? Should they be concerned with ratings that are coming in during difficult times like this?
I think every industry is going to have its good eggs and its bad eggs.
Yeah.
I mean, I think this jurisdiction in itself, the Middle East, has had a bit of trouble in the private equity industry in the last 12 months. And again, the way we see that at Berkeley Assets is an opportunity. It's a chance for us to showcase why we are good at what we do. It's a chance for us to really put the experience element that we try and provide to all of our clientele at the front as a showcase, if you like.
Yeah.
So I think the opportunities, the strategies, the way we've gone about things is positive. We just mind our own business, and we look after our teams, we look after our clients, and we're happy. We're delighted where things are going.
I do hope you're enjoying COVID 101, brought to you by the Berkeley Assets Social. We certainly are at the moment. That's right, fellas. Only another 48 jargon busters to get through, and then we'll let you go and have a lemonade. No, forget all that. We will, of course. And listen, if there is any questions whatsoever, just a quick reminder, get yourself on social, feed them in. We'll try and do this quite regularly for you to answer your questions. We'll put all the details up on the screen for you to be able to see that. One last one from me before a well-earned cold drink. Let's do this one. Crystal balls. Oh, we might not have crystal balls, but we've got bottles of water in front of us.
Warm bottles.
They're not the only warm things at the moment, that's for sure. Round the table if we can. 2020 outlook at the moment. Potential for clients. Potential in terms. What does COVID-19? Let me sum it up more simply. What does COVID-19 mean for the rest of the year? Obviously, our outlook has changed a little bit, but for you, what does it mean for the rest of the year for business? Gary, can we start with you?
Okay, so within the private equity arena, the downturn that has happened in 2020 means that there's a lot of cash money which is available that will be used. That will be used this year, without doubt, and that's not just us, that's PE across the globe. I just think we should still be cautious as to it's not a case of what's happened now and grab the opportunity while you can. I think there possibly could be some more opportunities later in the year, and by that I'm meaning further distressed companies, businesses that need the liquidity that private equity can provide. So positive for private equity. I'm still cautious about, as a global market, I'm cautious about the recovery that everyone's seeing.
Appreciate honesty, and that's what we're here to do as well. Really cut through all the red tape out there. Riz, considered opinions. What about you for the rest of 2020?
Markets, I think, will be volatile for the rest of the year. I think the US election at the end will create more volatility, potentially more of a downturn. I think, speaking to my clients in terms of what we're sort of saying, is I think there's more of a need for clients to readjust their portfolios, and as a result private equity fits in quite well in terms of what we do with the fixed return element. So we're seeing a lot more engagement from clients, and this is more coming from them in terms of wanting a fixed element with regards to their portfolio. In terms of private equity, both touching on what Omar and Gary said, absolutely there's more opportunity for private equity because we were gearing up as an industry towards this, sitting on record levels of nearly $3 trillion worth of cash. We're looking to deploy it. However, and what Omar said, what sets us apart from other businesses is how strong our due diligence is in selecting the right projects at the right time and making sure that we exit. Because when we exit, being realistic, it may not be as profitable as it would have been pre-COVID. And that's something that will test how good firms like Berkeley Assets and other private equity firms are.
OJ, final word to you. Are we still going to be doing this at the end of the year, come December? Are we still going to be around this table, maybe not this table, maybe others discussing
Not in this
this?
heat, that's for sure. I hope not. I don't want to sit through too many more of these. It's a grilling, quite literally.
But in terms of where the business is going to be at the end of the year, I mean, your business, the brand, but also the industry as a whole. What's your thoughts?
Personally, I think, you know, there's volatility for sure, right? We don't know what's going to happen as the year goes on, because, you know, coming back to COVID, is there going to be a second wave? Is there not? Now, in terms of security for individuals, I think the biggest advice I can give to people, a lot of the time they say, you know, when you don't know what to do, put your cash under the pillow in a sense, or put it under your bed. If this kind of crisis continues, there will be undoubtedly another banking crisis. Your cash will suffer further devaluation. So you don't want to just keep it there. You want to make sure that you are putting it in a safe place. So some people in downward times look at gold as a safe hold. And others tend to look at real estate in safe jurisdictions like the UK.
Yeah.
So I think, you know, we are going to see an increased amount of interest as time goes on, because nowadays the market's a lot more educated. They understand, or more people understand this than others. And I think testament to that, I mean, we launched our private capital division 4.5 years ago. Blackstone, the largest private equity firm in the world, launched theirs at the beginning of this year. And there's been a couple of other firms that have just launched over the last few weeks. And that tells you, that's quite telling, in where even the biggest firms see the market heading, or where they see the future of capital raising coming from. And that the private high net worth or sophisticated client is definitely one that is appealing to the private equity industry more and more.
You've heard it from the team, and listen, it's over to you now to send in your thoughts, your comments, and more importantly, your questions as well. As I said, we'd like to make this a regular feature, so if you've got any questions for us, feel free to send them in, get involved, whether it be on social or otherwise, to have your say. I think it's only fair. I mean, they say you've got to grill your interviewees, you know, in my role. You've got to ask them the questions that will make them sweat, but this really has taken the biscuit today, in more ways than one. I really appreciate all three of you for not grumbling at all throughout it, so thank you so much indeed, showing your honesty and your transparency. That was your PE 101 on the first ever Berkeley Assets Social in the Sun. There we are, that's what we're going to call it every single week. And thanks very much indeed to all three of you. Thank you very much indeed to the team of Berkeley Assets for making it happen. Thanks to you for tuning in. And the last one in the swimming pool buys dinner, all right?
That's all.